Happy day, everyone, and welcome back. I am the Simple Money Habits Guru. In this video, I'm going to interview a licensed insurance agent to do a deeper dive into the why of car insurance. If you've not watched my two previous videos on 4Core Health and on financial inclusion, please do so before watching this one, because in those videos, I briefly touch on car insurance. There are examples in those videos that will be helpful to understand the context of this video. For this video, you will need to assume that our entire conversation is based on Kentucky insurance laws, so you'll have to do your own research on the laws that pertain to you. I've invited Stephen Calhoun of Ingram Insurance Agency to join me today to help expand on not only the importance of having car insurance, but more pointedly, the importance of having the proper levels of coverage. Stephen and I have very similar philosophies on money in general, so having him on to discuss car insurance as it relates to the bigger picture of personal and family finances, Stephen is the perfect agent to interview on this subject. As a full disclosure, Ingram Insurance Agency is my personal insurance agent, but neither Stephen nor I are giving or receiving compensation for this interview. Additionally, we are not in any way giving advice. Remember, my only goal is to enlighten. Here's our conversation, but first, my apologies as I had a recording malfunction to where you will only see Stephen. Sorry, Stephen, we only get to see you. I hope you enjoy the content of this very important subject. As I said, I'd bring Stephen in with Ingram Insurance. We'll have a quick chat on insurance and kind of give you guys an idea of just what I was talking about in my other videos. If you haven't watched them, please watch them because they really talk about some scenarios. And Stephen and I will get into the importance of how insurance affects those scenarios. So, Stephen, why don't you introduce yourself?
Hey, guys. Yeah, I'm Stephen. As Sean has said earlier, I work at Ingram Insurance. I've been there for about just hit my 5-year mark. And I'm licensed in Kentucky for property and casualty. What that means is your standard, like your home, your auto, umbrella. I can do commercial insurance, workers' comp, those types of things. So it's not health insurance, not life insurance, things that most people, everybody have and need.
Which is great. And I appreciate you joining me today, Stephen. Thanks so much for being here.
Glad to be here.
Yeah, absolutely. So let's talk a little bit about state minimum insurances and what we're relating to on this video for everybody. We're not going to talk about life insurance, health insurance. We're not going to talk even about umbrella or homeowners. This video is basically to cover auto insurance. So that's why Stephen, being the expert, is why it's important. So Stephen, talk a little bit about what is the Kentucky state minimum insurance?
Kentucky has a state minimum of 3 numbers: 25,000, 50,000, 25,000 of liability insurance.
Okay, so 25, 50, and 25. The first 25 is for what?
That is, if you are at fault in an accident, your insurance company will pay 25,000 for any one individual in the other vehicle that's injured for their medical.
So you're talking the liability insurance. The state minimum insurance is basically a liability insurance, and that first 25 is for the other person, up to 25,000 of liability for their medical. What's the 50,000?
Correct. That's the maximum they'll pay for all parties injured in the other vehicle.
So they got 2-3 people in the vehicle. One person gets a maximum 25. If a second one's entered, they get a maximum of 25, or totally up to 50,000.
Totaling up to 50. Yes.
Okay, and that's liability, and that's some medical. So the third number, what's it? So we got the first number is medical for the first person. 50,000 is medical for the entire vehicle. And then the third number of 25 is what?
That's property damage. So vehicles.
Go ahead.
Vehicles, other objects you might hit. That's the payout maximum.
I run into a house, which, by the way, I had a buddy do that one night.
Oh, no.
I won't say if he was inebriated or not, but he hit a house. So would that 25,000 go towards that house?
Correct. Yes, for repairs.
So he knocks it off the foundation. Well, we'll get to that later. But if he knocks off the foundation, it's going to be more than 25,000. So we'll get to that.
Absolutely.
So 25, 50, 25 is all liability. Is there any other coverage that the state of Kentucky requires you to have on car insurance?
Yeah, you might hear Kentucky labeled as a no-fault state. We have something called PIP, or personal injury protection.
Okay.
The standard is $10,000. That pays for your injuries in an accident before litigation happens.
So straight away, I'm covered for $10,000 no matter what, no matter who's at fault.
Correct.
Okay.
Yeah.
And then if it deems that I'm at fault, then the 25, 50, 25 kick in for the other vehicle.
Correct.
Okay. Do they get 10,000 if it's no fault and it's below 25,000 for them for medical? They just get a nod on the head and they don't really have any. They got to buy some aspirin, and so they get 10,000. I get 10,000, and there's no litigation on 25, 50, 25.
It would kick in secondary.
Okay. The 25, 50, 25 is secondary to the 10,000.
Correct.
Okay. So the state minimum insurance is 25, 50, 25. In describing liability, it's basically you're liable for something to the other person. But in Kentucky, you get both parties get 10,000 up front, just basically. Is that 10,000 medical? Is it vehicle? What is it?
It is medical only.
Medical only. Okay. Personal injury protection. Why it's injury. Okay, perfect. All right. So let's talk about why state minimum liability coverage, if you carry that, is so very dangerous. I'm
sure many of your listeners have had medical bills, and you know how quickly that can add up. $25,000 is really not much if you have to go to a hospital. If an ambulance is involved, any stay at a hospital, you can exhaust that snap of a finger. So it's not much. So
you mentioned 25,000. Is that first 25,000 and the 25, 50, 25, that first 25,000, if I'm in a wreck and I cause a wreck, does that cover me?
It does not. It only covers the other parties.
Okay. So where it's so dangerous is the 25 medical is them, the 50,000 is them, and the 25 for the car is their car.
Correct.
So where's my money? I'm paying you my insurance company. Why aren't you why aren't you taking care of my medical bills? And why aren't you, taking care of my car?
Excellent question. That is not required by the state to cover your own injuries and vehicle. So you're only required to insure other people if you caused an accident.
So danger number one is if I hit them, there's a family of 4 in a Tesla. The first thing is the 25, 50, the 25 for one person's medical and the 50 for the family is probably going to be woefully low.
Oh,
and
yes.
25,000 on the back end for that car is not going to cover their vehicle. So
not at all.
Just by taking a state minimum, I'm really not protecting my nest egg once they come after me.
Correct.
Okay.
Correct.
So the number 2 would be, I don't have any insurance for me. They get taken care of. Let's say that it happens to fall within those limits. Well, their car's been repaired, my car's totaled, and I'm walking.
Right. That's where physical damage, some people like to use the term full coverage, comes into play.
Okay.
That would protect your property.
All right. So we'll get to that in a second. So right now with the state required minimum insurance, 25, 50, 25, it's the other person, the other person, the other person. I'm not covered. And by the way, it's probably, especially if you've been, like you said earlier, if you've been to the hospital, if you've been to the emergency room, that 25, 50 is woefully low.
Yes.
Okay. Any other thoughts on the state minimum insurance or what liability is?
Pretty basic once you know it. I think that hits just about everything.
Okay.
I will point out, we talked about expensive vehicles. Even the newer models of less expensive vehicles are smart. Where a fender bender used to be just replacing a bumper, bumpers are smart. They have technology in them. That property damage, even in a cheaper vehicle, can get real expensive real quick. So I want to point that out. Fender benders aren't as cheap as they used to be.
Yeah.
So the property gets exhausted quickly.
Yeah, that's a great point on the technology side. Everything's got to get reset. Even if you get a crack in your windshield these days, with all the technology, the sensors and everything, you've got to have your systems reset to the new windshield. So it's crazy. And I know in Kentucky, as a side note, if you get a broken windshield, insurance has to replace it, right?
If you have comprehensive coverage, and we can get
Okay.
into that.
So it won't cover it under the 25, 50, 25?
Not at all. No.
Wow. So they're not required. So there you go. So there's another reason that state required minimum insurance, a simple chip in your glass. And by the way, can you get tickets for having a cracked up windshield?
I believe so. I'm no police officer, but I believe you can.
Right. So you want to make sure that gets taken care of, especially through your insurance, and let them pay for it. Okay.
Mm-hmm.
So we've got through the liability, the minimum coverage. We talked a little bit about personal injury protection, PIP. Let's talk about the components of rates. So when you give me a rate versus somebody else a rate, what goes into that?
Oh, there's so many things. And I know probably people coming to you, Sean, are tired of paying so much for insurance and they never see why they need it. I'm going to leave some of that to you, but there are so many things that go into rate. Your age, your gender, your
They actually look at gender as a possibility with all the rules on gender discrimination.
Exactly. I would imagine there's stats out there about maybe men drive more than women. Maybe us guys are a little more reckless. I don't know. But yes, that goes
so
into
the old
it.
adage of women are worse driver than men it's actually the absolute opposite.
It's probably the opposite on all these stats.
Very cool. Very cool. Yep. Good on you, women. Good on you.
Address is a big one. So they look at your zip code and how many accidents or how many people are on the road in that zip code. I'm not a fan of this, but they look at your credit. Another reason why getting everything in line is very important.
Yeah, financially. So going back to the zip code. So if my son lives in Louisville, if he gets insurance from you versus me living in Alvaton, Kentucky, which is a much smaller town, his rates are probably going to be automatically higher just because of the zip code.
So many vehicles on the road, cost of repairs in that area, all kinds of things go into address. Absolutely.
Right. And then you mentioned the credit report, which is financial.
Yeah, it's sad. It goes into play. The other one, it's similar to credit, is your insurance score.
So what's an insurance score?
Yeah, it's not a firm number, but it looks at how long you've had insurance, how long you've had insurance. It looks at the liability limits on your auto in particular. So if you're coming with state minimum, it's not as high of a score. So that's another reason you want higher limits. I think to some extent looks at payment history. Really, you want to keep your insurance active and for a long extended period. So those are really what goes into insurance score.
So it sounds like probably 50% of that is what you can control and 50% is what you cannot control. So like if you live in Louisville and work in Louisville, unless you want to move out to the country somewhere and get out of that, Jefferson County zip code, which could be expensive in itself to try to move and then commute,
Sure.
But then I'm assuming, do they take in consideration your commute to work every day?
To some extent, I'm sure that's all in the stats of people in this zip code commute. Yeah, it's all built in.
So
that's what actuaries do, which is way beyond my knowledge.
Right. So what we can control is control the controllables, right? One of the controllables we can control is how we drive. Stay out of accidents, don't get speeding tickets. Easy things to say. Don't drive drunk. Obviously, all those things will be factored in if they're on your record. But also financial. I mean, you can control your finances and increase your credit number. You can actually over time lower your insurance rate. Plus, and then the other side of that is don't let it lapse, right? Don't ever let your insurance lapse.
That's a big one. Yes, absolutely. Yeah. Do not let it lapse.
So there you go. So there's control the controllables with the components of the rates, right?
Absolutely. I like your view though. I've not heard it put so plainly that half is controllable, half is not.
Yeah.
I like that. The other thing you pointed out is that your rates can go down, and you're right. But I do want to put an asterisk there and say it does take time. You have to be patient with that credit score because it's a long arch. It's years of developing that. I would love to say your next renewal is going to go down after your working with Sean or taking these advice tips, but it does take time. So
yeah,
be
and
patient.
that's a great tip. And I'm going to throw one back at you that you're not going to like. And everybody should look at their insurance yearly and say, am I getting the best rates? Because
Sure.
situations change, and it never hurts to get a quote from a different insurance agency, or go back to your current insurance agent and say, is this my best quote?
Right.
And again, I'll say it 100 times in my videos that what I'm teaching you takes time. What I'm teaching you takes discipline, and what I teach you is going to frustrate you to the end of the earth. But as you get every little simple piece of tip in here, and you start adding those little tips up, these little simple money habits add up over time. And then as you're making that money work for you and you start growing your nest egg, this type of insurance is a great way to prove that, hey, I could lose everything in a moment. For instance, one of my examples in the previous video was, if you've built this nice nest egg and you've got your house paid off, and you're carrying crappy car insurance, and you have a nasty wreck to a family with a Tesla, $125,000 car, and they end up, they're not going to not sue you for everything you've got if you've hurt the family, right? And then if their attorney's good and they know that you've got a paid for house, and I've got a $250,000 house, next thing you know, you lose $1 million lawsuit. You weren't properly covered, not only on car insurance, but health insurance. And as you said earlier, umbrella insurance, which I'll get to in a later video. But, that person who's got all that money, now they've lost everything just because of a simple car wreck.
Right. And it can happen quickly.
Right. So that's why, the conversation we're having is so important. All right. So we talked a little bit about the components of rates, the state minimum requirements of insurance, the liabilities. Let's talk a little bit about deductibles and premiums. What are deductibles and what are premiums?
Sure. Earlier, you were asking me if liability ever covered you yourself. No. So we get into physical damage, or full coverage, as some people like to call it. That is where your insurance protects your car, your property.
So,
and
if I can stop you there. So you said I can buy insurance that protects me?
Absolutely.
What can I buy to protect me on top of the state minimum insurance?
Sure. There's a few portions. You have your liability. That's a given.
Which is the other vehicles.
The other vehicles.
Okay.
Required by the state in insurance.
Okay.
The others protecting you, we have comprehensive coverage and collision coverage.
Okay. What is comprehensive?
Comprehensive acts of nature. So you hit a deer, hail damage, things falling and damaging your car that you do not have control of.
Like a tornado wiping out the entire city of Bowling Green.
Absolutely. We're all familiar with that here.
Yeah. So my car's parked in the garage, but yet the tornado takes the entire house and car away. My car with comprehensive is now covered? It's
not covered unless you have comprehensive coverage.
Okay. Very good.
Exactly. Theft is also included in that. I want to point that out.
It's not something.
Theft.
Okay.
So again, we don't have control over someone stealing our car.
Right.
So comprehensive are things out of our control.
Okay.
That protects our car.
Right. So somebody working 9 to 5, busting it, needs their car to go to work. They're already living paycheck to paycheck. They don't need that car stolen. And if it is, they need a replacement.
Exactly.
Okay.
Exactly.
And
collision is also covering your vehicle. That is exactly what it sounds like, a wreck. You collide with another car. You collide with a light pole. You flip your car in a ditch. Those are collision coverages. And your initial question was about deductibles. Both of those come with a deductible.
Okay.
And what a deductible, go ahead.
Let me back up. So we've got collision and comprehensive. Is there any other insurance that I can buy on my auto insurance policy that covers me?
Yes.
Okay. What else do we have?
We have rental reimbursement.
Okay.
This is if your car is in a claim and needs to be in the shop, not your engine blew out or, maintenance. But if a claim causes your car to be in the shop for an extended period, they will pay a certain amount per day, typically up to 30 days for you to get a rental vehicle.
Is that an
That
additional charge, or is that part of one of the other ones?
it is an additional coverage.
Okay.
It's minimal in cost, so we typically throw that in there. The last thing that would be on there would be roadside.
Okay.
That is an additional coverage on auto insurance.
Okay.
You can always get that separate with AAA, for example. But that's also a good coverage for you to have.
So what if somebody hits me and they're not insured? Am I just got to pay for it out of pocket?
Well, that's where your comprehensive and collision would come in. Your bodily injury kind of goes back to maybe a sub-level of liability. In the state of Kentucky, we have and underinsured motorists.
So you have
That
uninsured
is-
and underinsured?
Yes.
Is that
So
different policies?
It's on the same policy. 9 times out of 10, that's included. We're going to add that to every policy.
So would I see comprehensive, collision, uninsured, underinsured, or how would that look?
It's different on every different deck page,
Okay.
policy summary,
Okay.
the order, but it would be on there as well.
Okay. So I can buy that separately, uninsured, underinsured, or is that part of collision and comprehensive?
That is part of the policy as a whole.
Okay. So do I have to ask for uninsured, underinsured, or is it automatically?
I would look for it. It's not exactly automatic, but I would double check your policies, make sure you have it.
Okay.
I would put money on 9 plus out of 10 agents always put it on there.
Okay. Even if I do state required minimum?
State required minimum, look at your policy. When people want the minimum cost, that is un and underinsured is coverage that some agents will remove.
Okay.
So it's good to double check your own coverages
Okay.
because there is cost. So when people just want the bare minimum, sometimes that is cut out.
Okay. So I cut you off when you started to talk about deductibles. Let's go
Sure.
back to you. You started talking about deductibles and versus premiums, I think. So let's go back to that.
Yeah. So comprehensive and collision, the physical damage portion, do come with deductibles. A deductible is essentially what you're responsible for before the insurance pays out. That can be confusing to some people. It's not, they don't charge you that fee in a claim. They just exclude it from their payout, if that makes sense.
Yeah. So I got $10,000. It's my car's messed up. I've got comprehensive. They're going to pay me $10,000, but my deductible is $500. So they're actually going to give me $9,500 and I'm responsible for the $500.
Correct.
Okay.
Correct. Those are the $500 is a very common deductible we see. 500 and 1,000 are the most common, but there's a little bit less than that, and there's more than that as well.
Okay.
And you have to consider what you can afford in a
Okay.
claim.
Yeah, so we'll get to that in a little bit
course.
on the advantages and disadvantages. So let's talk about premium. So deductible is what if something happens,
Mhm.
then they're going to deduct that from the liability or from the payout that the insurance company is paying out, whether it's for the 25, 50, 25, or whether it's for my car if I'm covered in comprehensive. That dollar's got to come out. So if there's an accident and I've got 25, 50, 25, and I've got to pay all those out, and my car's got comprehensive, is it $500, say it's my deductible, does it cover towards the whole accident, or is that to each piece, that $500 deductible towards each piece? So 25, 50, 25 and my car, would that be 500 for each piece or 25 for the accident?
Just for, yeah. So if I cause an accident, my property damage portion
Mhm.
is going to pay the other person's. They don't have to worry about a deductible.
Okay.
Now, my car's damaged in the wreck I caused. My collision coverage, I would pay the deductible just for the physical damage payout to me.
To you. Okay. Because they're taking care of, you don't deduct them. You're not responsible for the $500 to pay them on the liability. That's taken care
Correct.
of. Okay.
Correct.
So that clears that up. All right. So deductible is what happens if something happens. It's not something that you have to have unless something happens.
Right.
Okay. So premium, what is premium?
Premium's how much you pay for insurance. With physical damage coverage, it is more expensive to have on your auto insurance. I'm sure Sean will tell you why it's good, why you're covering your assets for that. The price can vary based on your deductible choice. So if you think of it as a lower deductible means the insurance potentially pays out more because you're paying less in a claim, they're paying more. So you're going to pay more for that in premium. You're going to pay the insurance company more to have a lower deductible, and vice versa. When considering a deductible, you have to think primarily two things. In the event of my vehicle being damaged, how much can I afford at the time? Is $500 within my budget? Is $1,000 within my budget? But then you also have to consider how much I'm paying monthly. And that can be a factor too. Maybe you want to save more monthly so that you can reach those goals and have more in your savings to pay out during a claim.
So if your premium goes up, you're making less money per month in your pocket. That would, if your deductible is lower. So if you want to say, I want more in my pocket, I can increase my deductible, which will decrease slightly my premium.
Right.
But if I have an increased deductible of $1,000 and I don't have an emergency fund with $1,000 in it, then I might be setting myself up for failure from that aspect. So following, like you said, the rule of thumb is, if we've got a low deductible and a higher premium for now, we're covering more right now, we're okay. But as I make my emergency fund, if I've got a $2,500 emergency fund, can I do a $2,500 deductible?
You can.
Are there any advantages or disadvantages of a $2,500 deductible versus a deductible to premium? What are the advantages and disadvantages of these two changes?
It's as simple as how much coverage. The other thing is, if you have, I know I said fender benders get expensive, but if you have a little fender bender and it's a $1,000 fix and you have a $2,500 deductible, insurance is never going to pay that.
Which is good because you've got the money in the bank.
You've got the money in the bank to pay for that. Exactly.
And the other side of that, for me, a purchaser of insurance, I don't want to tell you about a $1,000 fender bender, because if I report a $1,000 fender bender to you, even though I'm paying for it because I've got a $2,500 deductible, what might that do to my insurance rate?
Yes. Even a claim, which is what you're talking about, if you file a claim and there's zero payout, it can increase your rates at your next renewal.
It'll increase the premium.
Increase the premium.
So by carrying a higher deductible where I can cover much more out of pocket and not have to report it, and I'm fine. I'm not hurting my finances. I'm not taking food off the table because I've got the money in the bank. I can cover that. I get it fixed. It's not automatically reported unless I call in a claim, right?
Correct.
So I'm protecting myself from my rate by having a much higher deductible.
Very true.
So and it's not your fault as the insurance agent. That's just what it is. And again, we go back to the components of the rates, where wrecks, even claims can cause problems. Even if you have 3 claims where you've paid for everything on yourself, you put all the claims in, now you're up a creek because all your premiums are going up, and you might even lose coverage if you have too many claims.
It's potential, yes, absolutely.
Right. And I'll give an example. My daughter was in college, and she knew snow was coming. She lived on kind of a main road outside the University of Louisville. Well, this night she actually pulled and parked on the side street because there was going to be snow, and she thinks, you know what? I'm going to be off the main road. I don't want my car hurt in case somebody hits it or the snowplow goes by or whatever. Unbelievably, a high drunk kid came around the corner trying to go too fast through the snow, slides right into her car, literally into her car. That was a claim. And because it was a higher level claim, we ended up, she ended up getting dinged for it, even though the other insurance company paid for it. And we got dinged for it because it was a claim on insurance. Her insurance went up. So if you can cover these things, these claims they're good to have. But in my opinion, if you can increase your deductible high enough where you can pay for a big number off of it, you can cut down the number of claims.
Absolutely. Yeah. And that goes to, why do we even have insurance, right? I
Right.
can imagine some people are asking that question in these examples. I think of insurance for big time emergencies.
Right.
It is your big things that you cannot take care of yourself. That's where insurance comes in, because they have the money. That's what you're paying for. For the little things, if you can take care of it, do that. Absolutely.
Yeah, I agree. And we'll kind of get off base on this. You know, if you have life insurance, health insurance, car insurance, homeowners insurance, you want to try to make that coverage as strong as possible to shift the liability off of you to the insurance company for that particular policy, right? And I'll get
Right.
into all the other policies, what makes sense for those as well. Like the high deductible health plan, when that came out, it basically it went from health insurance to catastrophic insurance. If something really goes bad, then you have the insurance, and that's basically a high deductible health plan. Well, if you use that same philosophy to your car insurance, get that deductible as high as possible to keep your premiums down, but also to keep the claims down. That's in my opinion. And I think as an insurance agent, you'd probably agree, you want less, claims, not because the insurance company doesn't want to pay, but for your people, you want them to have less claims if it's possible for them as well.
Right. Exactly.
Okay. So what are some of the advantages and disadvantages of the deductible versus premium? Again, let's get back to that.
Sure.
Do you have any other examples?
I think of, I don't know if this is exactly on course, but I see some people pay off a vehicle. The bank doesn't require them to have full coverage or physical damage coverage, and they remove that because it's expensive.
Okay.
If your car is totaled in an accident, can you easily go out and buy a new one? Probably not for most people. That's what insurance is there for. So even though your bank may not require it, it's still securing your assets if there's an event that you can't afford, like replacing your vehicle. So I encourage people keeping it even if they're not required by a bank.
Okay,
That's what comes to mind.
Yeah, that's a perfect example. That'll lead me to my next thought. Is basically how deductibles and coverages and premiums all relate to your overall your finances, and that's the kind of the simple money habits that I want to get to. This is a very important topic, this car insurance, because I had one of my examples in my other videos was one of my clients. She didn't trust banks. She didn't understand the banking industry, growing up where she grew up, didn't trust insurance. So she ends up going to a car lot that says, hey, you can buy here, pay here. We won't check your credit score. And by the way, we'll do all the maintenance on your car. Just bring it in and we'll do all the maintenance. And then, oh, by the way, all you have to cover is state minimum insurance. What they're playing on is exactly what you said. How much can you afford a payment for this car? Right. Mm-hmm. So they're squeezing or shoehorning her into a payment and saying you can afford this much payment, this big payment, because you can carry the small liability insurance on your insurance. Well, when we dug into the numbers, the car loan was 4 times the amount of the car. Of course, they can pay all the maintenance, bringing in for all the maintenance. She's paid for 4 of them. And then on top of that, it was around credit card interest rate around 30%. It was a front loaded loan. And now they've set her up for failure because they said, just cover state liability insurance. So now she wrecks the car. She takes care of the other folks, hopefully. And then, by the way, she doesn't have a car. So This is why it's so important. If she had gotten a bank loan properly, they would have required the hard insurance, and I'll let you talk to that in a second. But that car payment, being the proper car payment from a bank, would be much lower. She could have afforded the full coverage insurance, covering herself and her car, protecting her assets. And if she had a car wreck, she'd be able to get a new car, and the situation would have been a lot better. But they're predatory when they prey on her. So let's talk about, why do banks, if you finance a loan with a bank, why is their insurance so much more costly that they require full coverage? What are they getting at?
There's 2 aspects. The bank is giving you money to buy this car. So they want to ensure that if you get in a wreck and total a car, they get their money back. It's just the nature of it. But also they want to protect their customers. and they want you to be able to get that car back. The short term is they want to secure their assets. You should in turn want to secure your assets, which is your car that you're paying for.
What you're saying is the bank's money is at risk, not yours, because they've given the money to the dealer or the person you bought it from.
Right.
They've given let's say $10,000. So the bank's giving them $10,000. It's the bank's money. It's not yours. And
exactly.
As you make payments back, you're slowly paying the bank back. But, in the first 6 months, you haven't paid much back. You still have a big note on the car. The car gets crashed and you only have state minimum insurance. The bank's out the money, not you, if you can't pay the bank back. So
right.
The bank's protecting the asset for themselves, which makes sense. And then what you were saying is, so the bank, you pay off the bank over time, or you're able to chunk it down and get it done early. You pay off your car note, and then people go, oh, I don't have to carry full coverage anymore because the bank requested it. The bank wanted it. Well, no, it's to protect you and your assets, like you said.
Yeah, you think of yourself as the bank at that point. Your money is tied up in that car, and you want to secure that car. If you lose it, can you pay it back? Can you buy a new one right away? That's where insurance and physical damage comes in. They can do that. So you're shifting that again, like you say, the liability, the risk is going to the insurance company, and you get a car if it's totaled.
And so you really want to protect that. That's because the next question is, if you don't have a car, can you continue to work? Right. So I covered
all tied together.
Yeah. So I covered a state minimum insurance because, I paid off the car. Now I don't have a car. And by the way, I owe the other people more money because my state minimum insurance didn't cover everything for them. And, oh, by the way, I've got to go to work, and it's 20 miles away or 15 miles away or even 10 miles away. How am I going to get to work? So now,
right.
So you've just added the stress level up to your roof. But if you work through the next couple of years, from our standpoint, my standpoint, what I teach is you pay down your bills, you get the insurance correct. And in a couple of years, if something happens, I've got $2,500 sitting in the emergency fund. I've got $1,000 deductible. Something happens to my car or them or whatever. Now let's talk a little bit about the 25, 50, 25. Should I just carry full coverage? Should I carry 25, 50, 25, or should I increase that for better protection?
I definitely say increase it.
Okay.
Back to what we were saying, injuries and hospital stays can just skyrocket quickly. So someone who still lives in an apartment, maybe they don't have much money, they don't have much owned property.
Not a lot of assets.
Not a lot of assets. The next step up is decent. It's a good place to start. And that's all those numbers doubled. So it's 50, 150.
Okay.
It's more than state minimum.
Right.
It's still lower, but it's a better place to start.
Okay.
And then as you get more, those numbers should increase and reflect your assets, whether it's a house or maybe you have a family. You want to make sure that you've paid and you can pay enough in an instance of a claim that your family isn't then affected. But definitely the simple way to look at it is, how much do I need to cover? How much could someone sue me for? House is the primary example of how much is your house worth? Is it a $200,000 house? Is it $300,000, million? You want enough liability so that there's no chance of someone coming after you and your assets. That's where insurance steps in and they take care of it.
So if I got a 25, 50, 25, I've got full coverage, but it's still only 25, 50, 25 on liability. I hit a Tesla family of 4, and I've got a $300,000 house that has $200,000 worth of equity, right? And the other attorney knows it, and it's a $500,000 lawsuit. Well, my insurance just covered 25, 50, 25, and they said, good luck, you owe the rest. Well, I've got $200,000 in a house. Guess where that's going?
Oh, yeah.
They're going to take that and get it out the door. Now I not only don't have a car, I don't have a house. My kids are, like you said, if you have a family, my kids are stressed and we're trying to move them or whatever we have to do or take a loan on it. Now we've got some other loan we're borrowing from family, whatever we got to do to get through this lawsuit, or we're making payments over the next 10 years to these people because it's a $500,000 lawsuit. So just having, the proper levels of insurance, as you say, really protects more than just your car.
Oh, yes. Protects everything you have. Insurance is not evil. Some people hate it for certain reasons, and I can understand people's feelings towards it at times. But if you look at it as a means to protect what you have, and it does. That's what you need insurance for, protect your assets, to let them pay for things that you can't afford in a catastrophe. Absolutely.
So if you have the right levels of coverage and you have the right deductible and you have the right emergency fund and your finances are okay and something bad happens and you're covered properly and it's just a bump in the road for your finances, how much stress do you think that would to be on that family?
If they have enough coverage?
If they have enough coverage and they've got plenty of money for the deductible.
Immensely less stressful than if they carry the minimum.
So you carry the minimum, you get in a car wreck, you cause the issue, you don't have a car now, you can't work, and they're suing you for more money than you've got. How much stress does that add to your life?
I don't want to know.
Right.
So, too much, yeah. Where doing better things with your insurance could help with that so much more.
So a minute ago, you said insurance is evil. Well, I think insurance isn't evil where people think it is evil. I think that's a fantastic point to where if you can get your finances arranged right, then you shift the liability to somebody else. You should be extremely happy that they're offering this in this way. And so, having insurance to me is the right thing. You should be happy about the insurance. I have a way to give somebody else the liability if I accidentally screw up.
Yes. Let them take that stress from me. Let them figure out the financial aspect that I don't have to worry about it.
Awesome. Stephen, we've talked about state minimum insurance. We've talked about liability, what it is. We've talked about the liability insurance as far as state minimum, why it's so dangerous. We talked a little bit about the components of it, deductibles and premiums, the advantages and disadvantages. We talked about why banks require you to do full coverage and then why you shouldn't drop that. Is there anything else about auto insurance that, let me ask one question before I throw that out there. You said the 150 would be good for somebody like a renter. How high can I go on that liability? Can I go 250, 500, 250? Can I go 500, a million, 500? How high can I go on the auto insurance?
Typically the highest is 250,000, 500,000, 250,000. And then if you need more than that, that will be another video for you. That's where an umbrella kicks in. So you can go up to those. Typically, people with more assets, we definitely encourage them to have that highest limit, 250, 500, 250.
Right, right. And then depends on how much assets they have, then possibly, exactly, like you said, an umbrella, which we can certainly talk about.
Exactly, yeah.
Okay. So again, we talked about all these items on the list. I'm going to give you the last word of the video. Is there anything else insurance that you want to put out there? Any kind of last thoughts as an insurance agent talking about what we just talked about? I hope I've helped them become excited about insurance versus insurance is evil.
Right. I hope so too. Talk to your agent, ask questions. You mentioned shopping your insurance every year. I would lean towards looking at it every year, evaluate it, see what it looks like to you, ask your agent questions. If they deem that you really need it to be shopped because it's absurd, they can do that. There are different types of insurance agencies. I do want to point this out.
Okay.
I'm what we call an independent agent. So my company that I work for has contracts with several different insurance companies. We don't provide the insurance. We are just the agency. There are other ones that only have their insurance. State Farm, Farm Bureau, there's a long list. There are advantages and disadvantages. Not every company's bad, not every company's great, but you can shop around. It's your right, and you should. If if you've been with a company for 5 years and the rate's still the same, then kudos. That's amazing. So definitely look at your insurance every year. Ask your agent questions. They should be happy to help you and understand what your coverages are.
All right. And then, of course, there's the whole bundling thing where if you have a home and auto, you can bundle
Mhm.
things and then umbrella and different policies. We can
Sure.
certainly get that under another one, but that would be going to the component of the rates too, is if you've bundled other assets that you have. Stephen, is there anything else? I'll give you one last word. And if not, I really appreciate you joining me. I'm going to put this video together and hopefully it'll help enlighten some folks on insurance.
Yeah, I hope this reaches somebody. I appreciate you, Sean, having me on here.
All right, buddy. Well, I'll let you go for now and I'll finish the video. Have a great day.
All right. Thanks. You too.
All right. See you, buddy. I hope you enjoy the content of this very important subject. I hope this video has helped to enlighten you about how important carrying the proper levels of car insurance truly is. Simple Money Habits is all about your money. It's not an income problem, it's a spending habits problem. And like everything else in life, you choose your habits. Take the quote from F.M. Alexander, where he states, "People do not decide their futures. People decide their habits, and their habits decide their futures." That is a very powerful statement. Mind, body, spirit, financial. The 4 core components of a very happy and stress-free life. They all come down to simple habits, so choose wisely. Schedule your free consultation today. Begin your journey to a brighter future. Click the link in the description below for your free consultation. And other than debt, financial baggage, and stress, what do you have to lose? Be sure to hit that like button, subscribe, and share my videos with those you truly care about. Thanks for watching. We'll see you again soon. Be 4 core healthy. You can do it.